Now, when should we draw our Fibonacci lines? I mean, how do we know when it's time to draw Fibonacci? Well, we want to draw Fibonacci at the end of an impulse move, or at the end of a swing, when price flips. Now, in our current example, we're looking at an up move or an upswing, and so if we start here from 1 down here, this first green bar, and we look at these 3 green bars, the first one and the 2 subsequent to it, and then price rolls over, price flips, the bar turns red, we have a down bar. At the time we have this down bar, it's time to draw our Fibonacci retracements. So we go. We draw our fib levels. We drew our fib levels after this bar, this first down bar after our impulse or upswing move, and we pull back to 78.6 Fibonacci. Okay, and then we made a very nice up move after we did that. Okay, let's look at where would we draw our next Fibonacci. Well, the trend is still up and the move is still up when we draw here, and we come down here and we bounce up. So, but where do we stop next? We stop right here. Okay, now we can see it better. But okay, now that's better. Okay, we went from down here to a high up here. Now this is only one bar, but it is a reversal bar, and it closed up and it was higher than this bar, and it formed a pivot. Okay, so now this next bar was a down bar, a red bar, so that means this was a corrective bar. And at this point, once we look and see at the close of this bar, we see that we're back at 50% Fibonacci from the last move, which was at bar 3 here, the low, on up to the high here, near 4 up here. Once again, we fall back to 50, continue the trend. Okay, let's see now, where would we draw our next Fibonacci in this sequence? Well, this was our last low, and this was the last impulse or up move. So the impulse or up move started here, went up to here. Now we see a flip. Price rolled over, turned red. So now it's time to anticipate a correction and draw our Fibonacci levels once again, from the low to the high. And now we come down, we follow down, we come back to our 50% Fibonacci level before we test it again. But even after we tested, we went back up to 38.2 Fibonacci, and we understand why that happened from our section on the stairway to profits. And now we can also add our volume, an MFI indicator, and in addition to using our Fibonacci levels, we can coordinate and see how our Fibonacci levels fit into our regular levels of support and resistance, which are the prior highs and the prior lows. And when you have a Fibonacci level, for instance, this was a prior high here on this 1 hour chart coming down here. And so and this high here, as prices coming down here, this prior high, we would assume actually, just based on normal support and resistance level, that price would come down and test this prior high before moving back up. And then, you know, we want to have additional clues on if we think the support or resistance level will hold and price will bounce back up off of it. Well, when we see this line here, this 78.6% Fibonacci line here, so now we have underneath, we have bottom support here at this prior top. Support to stop the move on the way down. And we also have support in the form of 78.6 Fibonacci. So that's double support. And if we were to apply our volume rules to this, we would look down and see that this bar here that closed below 50%. Okay, when we look, we see that it had higher volume. However, it was a public bar. It's a reversal bar, but it's a public bar. You know, it closed below 50% Fibonacci. So just as we discussed in the section on Stairway to Profits, if it closed below 50%, we're going to expect it to go ahead and continue down to test the next level or the next floor below, which is 61.8%. And because we're incorporating our normal support and resistance level that everybody plays, the prior highs and prior lows, and if we draw our line at the prior high here, and we see that we had a couple of tests here, but the Fibonacci levels in also in conjunction with the footsteps here and the prior top served as significant support here. And we would normally want to anticipate, we want to see confirmation, but normally we would anticipate, because the trend is up, and when the trend is up, we're looking for price to bounce off of support. And when it gets down to support, we want to see what kind of help does support have. Does support have help with Fibonacci? Does support have help with volume? Does support have help with MFI or stochastics, whatever, and moving averages, whatever other indicators that you may be using? But this is the basic structure of the market and how the market moves. And now we can see how price came down and tested 61.8% and bounced back up, so 61% held, and we see that 61% held here. Now remember, in our section on Stairway to Profits, we talked about how the 23.6, the 61.8, and the 78.6 were breakout levels, where if price closes beyond these levels, it would be expected to continue to at least the 100% level. Now when we look and see our second bounce here off 61.8%, we go up to 23.6%. Now look what we have here. Our next bar flips again. Okay, and this 23.6% level is very, very predictive, is very effective. So now we have a flip here, and now we have a close below 23.6. Okay, and what that tells us is that a trend change is impending, that a trend change is very possible here, because for the up move to continue, this 23.6 level really needed to hold. because I mean, if we're going up floors and we're going to continue to go up floors, um, our momentum has to stay up in order to keep us going up. And now our momentum has changed. And now, once we close below this 23.6, this 23.6 level now becomes resistance to a further up move. Okay, and as would be expected, um, we break 23.6 and we go and test 38.2, and we bounce and come back up and try to attempt to test 23.6, just like we talked about in the Stairway to Profit section, how each floor there's a close beyond the level, then there's a pullback to test the level, then there's a continuation to the next level, and it goes like that all the way down. So now we know when we want to draw our Fibonacci lines. And now, so getting back to when, and now when we look here, we see there's a possible trend change here. So when we see that we've tested our lower range of Fibonacci, then we've come back up with the trend and move beyond the upper range of the Fibonacci, but now we close back in. Now that